We've got some more news to talk about that could further impact the Toronto real estate market. Last week, bond yields made another big move up, and so we're here to break things down for you and tell you what this means for Toronto real estate. Let's get started. So, what exactly happened? Well, last week, the Canadian government bond yields made some big shifts up. The 5-year bond yields jumped by 30 basis points, hitting a 16-year high, and the 3-year bond yield surged by a similar amount. Now, because fixed mortgage rates are based off of bond yields, what we're likely going to see is a similar bump up for fixed mortgage rates over the next weeks. Now, if the first thought that comes to your mind is that we're probably going to see more rate hikes, I'd have to say not this time. All of this happened after the U.S. Fed rate meeting last Wednesday, and the Fed actually held overnight rates at 5.25% to 5.5% at that meeting. And on top of this, the FOMC consensus tells us that they probably won't go much higher than 5.6% this year. But even though the short end of the yield curve has likely peaked, the big shift was in the change in the longer-term interest rate projections by the FOMC, where rates are now expected to be higher for longer. Now, 2024 shows an increase of 50 basis points compared to June's projections, and the same goes for 2025. And now that 2026's projections are out, those seem to be higher than expected too. This is the big reason why bond yields experienced that big jump up last week, which in turn will also push fixed mortgage rates up by likely a similar amount. So what this means is that basically no matter which way you go in terms of fixed or variable mortgages, the rates are going to be up and higher than what they used to be. Taking this back to Toronto real estate, there will be some impacts. Higher rates continue to affect affordability and in turn bring real estate prices down, but probably not as much as you think. A 30 basis point increase in rates could translate to around a 3% drop in property prices. But the big benefit for buyers is that with all of this negative news and volatility, we are in a very strong buyer's market right now, and so you can potentially get a lot more bargain power lately. What this means is that even before all this mortgage rate increase news, it's been pretty possible to score deep discounts of 10% or more if you come across the right motivated seller. So if you think about it, if you got a great deal before the rate hike, you can still potentially buy at a better price compared to getting an average deal with that extra 3% discount. The positive side is that the short end of the yield curve is definitely stabilizing, and that points to central bank target rates likely holding at these levels moving forward. So what this means is that we are getting close to a point where real estate prices will soon stabilize too, and confidence will follow from that. Don't get me wrong, rates are likely going to be held high for longer, which points to a more balanced real estate market. The big difference, though, is that you probably won't see as much bargain power later on once more confidence comes back. And so the discounts that you get from the sellers likely won't be as big later on. As long as the numbers do work out in terms of positive cash flow, you are in a strong position to benefit from good rental income, value-add appreciation, and long-term gains once the market rebounds. Check out this deal of the week from our sales team last week. With a purchase price of $1 million and $75,000 in renovations, you can potentially split this house into 3 rental grade units, generating a total of $7,400 a month. That's a positive cash flow of over $1,400 a month, even with the rate increase. So if you want to learn more about what's going on in the market or where the best deals are, just reach out to their team. We're a real estate sales brokerage that focuses on investing in freeholds in Toronto, and we're happy to chat more about this. Just take the first step to book a Zoom discovery call with us. If you found this video helpful, show your support by giving us a thumbs up and hitting that subscribe button to stay updated with our content. Our channel covers a wide range of real estate investing topics in Toronto, from market trends to housing policies, interest rates, and investing strategies. We want to make your real estate investing journey easier for you, and so we offer services like planning, analysis, buying and selling, renovations, leasing, and property management. For more information, visit our website or find us on social media. Thanks so much for watching, and I'll see you in the next video. Bye.